Welcome to Dave's Daily Crypto Take. Today is Tuesday, November 9th, 2021. Let's take a look at today's charts. At number one, we got BTC riding a green wave, $68,341.13, up 4.53%. Ethereum at number two, $4,805.76, up 1.64%. Binance Coin number three, $646.34, up 1.08%. Solana at number four, $247.29, down 0.31%. Tether at number five, $1. Number six, Cardano, $2.17, up 6.21%. XRP number seven, $1.27, up 0.16%. Polkadot number eight, $53.05, up 0.27%. Dogecoin at number nine, 28 cents, up 4.63%. And last but not least, number 10, USD coin, $1. Let's take a look at the crypto fear and greed index. Extreme fear can be a sign that investors are too worried, and that could be a buying opportunity. And when investors are getting too greedy, that means the market is due for a correction. So what we got today is extreme greed at 84. Yesterday was greed at 75. Last week was greed at 73. And last month was greed at 71. Let's take a look at our 5 articles today. Article number 1 is how Microsoft will move to the Web 3.0 blockchain division to expand. Article number 2, Bitcoin dev believes Dogecoin, Shiba Inu do nothing for civilization. Article 3, Elon Musk and Jeff Bezos have completely lost it on Twitter. Article 4, Bitcoin could hike despite its correlation with DXY playing spoil sport. And last but not least, our main article today is survey, nearly half of millennials comfortable owning cryptocurrencies. All right. Before we get into the articles, I just want to say thank you so much for everyone that's been listening into the podcast and watching the YouTube video. I've been looking at the analytics and I've seen people that are listening to the Google, Spotify, and Apple podcasts. So thank you so much. A lot of people are on iPhone users. So thank you so much for that. And if you're in the YouTube space, please like, share, and subscribe. It helps me out greatly. So yes, thank you so much. Much appreciated. All right, let's get into it. Article number 1 is how Microsoft will move to the Web 3.0 blockchain division to expand. Tech giant Microsoft will expand its blockchain team, according to this Department Director of Strategy and Transformation, Blockchain and Cloud Hardware Supply Chain, York Rhodes. Via his Twitter account, Rhodes called on potential candidates and everyone obsessed with Turing-complete, scarce, programmable objects. In his post, Microsoft Blockchain Director revealed that he has formed a new team at the software company. Rhodes added that he has spent 6 years down the blockchain hole, and I've never been more bullish on this journey. Rhodes took part in Bloomberg's Financial Innovation Summit. During the event, he claimed that the tech giant is keeping a close eye on the blockchain and crypto industry, with a special interest in digital assets, decentralized finances, and non-fungible tokens. The latter are two of the hottest trends in the space and have received a massive surge in institutional interest. In particular, NFTs are being boasted by major companies such as Microsoft, Visa, EA, Ubisoft, has potential financial disruptors across many sectors. Rhodes published current job offers to look for potential candidates that could join its blockchain team. According to a job offer live on Microsoft Careers, the company seeks a senior software development engineer. Candidates need to have a supply chain and blockchain experience to join the company's team working on Consortium, part of a global initiative to build the world's largest supply chain network. Members with Microsoft partners and customers to enable enterprise-scale blockchain services deployment and system integration. Microsoft aboard the blockchain boat and into the metaverse, the tech giant has already deployed major projects on top of a blockchain. The decentralized identity solution ION was successfully launched on the Bitcoin network as a second layer application. Completed in over 4 years of development, its purpose is to give individuals control over their digital exchanges by leveraging decentralized identifiers. In addition, the software company plans to complete and compete with Facebook, recently renamed Meta, and its ambition to create a metaverse ecosystem. The company's CEO, Satya Nadella, presented their plan at the Microsoft Ignite 2021 conference via his Twitter account, Nadella. He said, quote, "The metaverse is here, and it's not only transforming how we see the world, but how we participate in it. From the factory floor to the meeting room, take a look." The metaverse, large-scale AI models, and other innovations were part of Nadella's presentation. The technology that powers cryptocurrency blockchain seems poised to play a big role in the company's strategy to take over this new digital sector. The crypto market has positively responded to this and other announcements about the metaverse. Related coins such as Mana and Sand have propelled into all-time highs with rallies that surpassed 300% in profits. So what do you guys think about this article? How Microsoft will move to the Web 3.0 blockchain division to expand? Comment down below and let me know what you think about Microsoft and Facebook getting into the crypto world. All right, let's take a look at article number 2. Bitcoin dev believes Dogecoin, Shiba Inu do nothing for civilization. So blockchain's relative complexity and its digital nature remain some of the top hurdles in the way of large-scale adoption and timely regulations. To alter this perception, many enthusiasts have been educating both communities and politicians to foster the wider acceptance of cryptos. It is not always an easy task, admitted Bitcoin core contributor Jimmy Song in a recent podcast, adding that an explanation is generally met with a lot of excitement. For instance, he noted that the prevention of bad actors is a top concern for many politicians he had lobbied. It's a rational concern, according to Song, who said that Bitcoin's ledger solves exactly this by being able to track each Satoshi to the last point. Most people he spoke to are equally curious about the identity of Satoshi Nakamoto, the anonymous author of BTC's white paper. This is one factor that differentiates the King coin from other blockchains, said Song, explaining, every other cryptocurrency was started by a CEO and marketing team, and that's who you're hearing stuff from, and that's why that stuff's out. On the contrary, this has led to many people missing out on the point of blockchain technology, which was decentralization and removing any central point of failure. Rather, they throw out that buzzword to feel like a part of the scene, Song argued. What are you doing with the blockchain? You're buying it on some exchange because you think the number's going to go up. That's all there is to it. And so don't tell me you're here for the technology. You're here because you're gambling on a puppy poo coin. Doge and Sheep do nothing for civilization. Song also took a shot at meme coins like Dogecoin and Shiba Inu, both of which have seen significant price appreciation on the back of community and social media hype, criticizing blockchain's companies for using marketing to pump their tokens, most of which have no fundamentals, he claimed. Quote, I've gotten so far away from the fundamental value and the underlying productive capacity to a collective will to make something up and go up, and it happens because there are enough people that are willing to create their own reality. He added that ultimately ends up with the capital going towards stuff that's completely useless. The programmer went on to argue that good investments in worthy companies lead to the production of efficient products and services, furthering civilizations. However, something like Dogecoin or Shiba Inu absolutely does nothing for civilization. And if capital sinks into those things, you have civilization decline, and that's what really gets me. Shiba Inu has rallied by over 75 million% over the past year, far eclipsing the performance of the OG meme coin Doge. This can be attributed to little more than the Sheeb army. However, its more recent pump was triggered by a petition for listing on Robinhood. In fact, currently it is the most popular petition on change.org with over 500,000 signatures. So there you guys have it. What do you think about this? Bitcoin dev believes Dogecoin, Shiba Inu do nothing for civilization. Comment down below and let me know what you think about Doge and Shiba. All right, let's keep on going. Article number 3. Elon Musk and Jeff Bezos have completely lost it on Twitter. Musk asked a senator about his cum face, and Bezos threatened to throw Leonardo DiCaprio off a cliff. Elon Musk and Jeff Bezos, the number one and number two most wealthy humans on the planet, have had a hell of a 24 hours online. Bezos, the Amazon founder, whose net worth is around $200 billion, implied that he would personally throw actor Leonardo DiCaprio off a cliff in a tweet. He was responding to a video from the LACMA Art Plus Film gala where Bezos' girlfriend, Lauren Sanchez, the alive girl, is talking attentively to DiCaprio with Bezos shuffling his feet awkwardly next to him. Leo, come over here. I want to show you something, Bezos tweeted, with a photo of him leaning on a sign that says danger, steep cliff, fatal, drop. Is he planning to Spartan kick DiCaprio off a cliff with his size 12 feet for talking to his girlfriend? Could be. Well, here he is. Danger, steep cliff, fatal drop. Leo is Mr. Steal Yo Girl. Wow. Meanwhile, Musk, whose net worth is $300 billion, spent Sunday doped up about potentially having to pay taxes and speculating about the old faces of a sitting US senator who suggested he should pay taxes. Musk changed his Twitter screen name to Lord Edge and his location to Trollheim. No one can say but the man himself why Musk does the things he does. But people can speculate. Founder of Dogecoin, Billy Marcus, who goes by Shibetoshi Nakamoto, tweeted that Lord Edge is an anagram for Elder Doge, something that is both true and very stupid. Well, Lord Edge is an anagram for Elder Doge. Trollheim brings to mind the underworld of Norse mythology. Helheim, which is guarded by a hellhound, yes, a big dog. In February, Musk single-handedly sent the meme coin skyrocketing after tweeting Dogecoin is the people's crypto and crashed it just as fast in May by calling it a hustle on Saturday Night Live. He's since been trying to backpedal that moment by supporting Doge anytime it comes up and talking about how his production line employees at SpaceX and Tesla, whose union forming attempts he tried to bust, own Doge. Or maybe he's just riding the high of sexually harassing a senator the night before. Ron Wyden tweeted about the billionaire's income tax plan, suggesting that Musk should pay more taxes than the rest of us. And Musk retorted with the eloquent response, "Why does your PP look like you just came?" referring to Wyden's profile pic, or maybe his PP. So Ron Wyden tweets on November 7th, "Whether or not the world's wealthiest man pays any taxes at all shouldn't depend on the results of a Twitter poll. It's time for the billionaire's income tax." And Elon Musk retweeted back, "Much is made lately of unrealized gains being a means of tax avoidance. So I propose selling 10% of my Tesla stock. Do you support this?" And "Why does your PP look like you just came?" November 8th, he said. This capped off a relatively chaotic day, even for Musk, where he started a Twitter poll asking if he should sell 10% of his Tesla stock so he would realize some of his gains, which would hit him with a tax bill. Users voted that yes, he should do this. Tesla stock is down $32 so far today. Bezos, meanwhile, has just bought $78 million plot of land in Maui with his own private beach, with his employees fight for fair pay and safe working conditions. Musk is a new father and also newly single. Both of these men have been better to do, but are logged on and exhibiting extreme divorced dad energy. Personally, if I were very healthy and wealthy, I would simply log off forever. But maybe that's why I'll never be very wealthy. So, what do you think about these two billionaires, Elon Musk and Jeff Bezos, have completely lost it on Twitter? Comment down below and let me know what you think. All right, before we get into the next round of articles, just want to say welcome to everyone that's been listening to the podcast. I've been looking at the analytics and I see a lot of you on Apple devices, so you've been listening to Apple Podcasts. But if you are on Google, you could catch me on Android, such as Google Podcasts or even Spotify. And if you're in YouTube space, please like, share, and subscribe. It helps me out greatly. So again, I appreciate all the love. And remember, all the news here is all unbiased. So there will be for crypto and against crypto. All right, let's keep on going. Article number 4. Bitcoin could hike despite its correlation with DXY playing spoil sport. The first week of November for Bitcoin was nowhere close to October's first week gains of over 25%. While BTC is well above 65K now, the sideways movement that succeeded its last all-time high left market participants skeptical of the King coin's trajectory. While there seemed to be no particular reason for the recent consolidation, there are some factors that may have directed this worrying trend. Dxy BTC correlation. Interestingly, there's an inversely proportional relationship between DXY and BTC's trajectory. The DXY is an index that tracks the performance of the US dollar and over the last few years. BTC and the DXY have presented a striking relationship. Whenever DXY goes up, BTC price goes down and vice versa. In fact, in November, the hike in DXY seemed to be leading BTC's price consolidation. However, even though the DXY rose, BTC's price held well. Nevertheless, pseudonymous analyst Barrel Virtual claimed that since BTC has become dependent on the DXY, it faces the dangers of hard corrections. What's more, on 3rd of November, the Fed cut purchases by $15 billion a month. This means that treasuries will continue to rise in value along with the DXY, and BTC may not achieve great goals, may be limited to 72 to 80K range. So are the dreams of BTC to 100K and 200K merely dreams? Well, it doesn't look like it, and here's why. Higher levels assured. First of all, analysts have long considered the BTC pullback to be a key step in BTC's overall movement. In fact, the retesting of 61K was considered important for the bullish narrative for BTC's price. Additionally, a year-end target of 100K for Bitcoin is considered a worst-case scenario by on-chain analyst Plan B, as per the stock-to-flow model. Plus, with the upcoming Taproot upgrade, seems like BTC was following S2F-like clockwork. Furthermore, exchange reserves have been falling while miner reserves have risen. Additionally, the accumulation and distribution indicator highlighted an accumulation phase that began in 2020, with the same still on an uptrend. So with a long-term bullish picture in place, is it possible that BTC disassociates with the DXY and continues to rise? Well, looking at the current price, the same is definitely a possibility, especially since at press time, the aforementioned sideways price action had been left behind. So there you guys have it. What do you think about this article? Bitcoin could hike despite its correlation with DXY playing spoil sport. Comment down below and let me know what you guys think. All right, let's take a look at our last topic and our main one. It is called Survey. Nearly half of millennials comfortable owning cryptocurrencies. So while much of the investing world remains skeptical about cryptocurrency, many millennials have embraced this new wave of digital assets, according to a recent bank rate survey. Nearly half of millennials, 49%, are at least somewhat comfortable with investing in crypto assets such as Bitcoin, compared to 37% of Generation X and only 22% of baby boomers. In fact, millennials ages 25 to 40 express the most comfort of all age groups with cryptocurrency. About 15% say they are very comfortable investing in digital currencies compared to just 7% of Generation X, ages 41 to 56, and 4% of baby boomers, ages 57 to 75. Millennials most comfortable with cryptocurrency, nearly half of millennial Americans, ages 25 to 40, are at least somewhat comfortable investing in these new digital assets, including Bitcoin. Some millennials aren't just comfortable with cryptocurrency, but actually think it's the top place to invest. About 12% of millennials think Bitcoin or other cryptocurrency is the best way to invest money that they won't need for 10 years or more, according to the survey. In comparison, just 9% of Generation X and 5% of baby boomers say that cryptocurrency is the best investment over the next decade or more. The survey results come during a period of escalating interest in Bitcoin and other cryptocurrencies. In mid-October, the first Bitcoin-linked ETF began trading to great fanfare, allowing investors to wager on the price of the cryptocurrency through a stock exchange. So, should you invest in cryptocurrency? While many Americans may be comfortable investing in cryptocurrencies, financial experts caution that they come with some key drawbacks, including their purely speculative nature. Their design makes cryptocurrencies tremendously risky and unsuitable for most investors. Bitcoin has been on a roller coaster ride in 2021. It started the year around 29 grand and soared to more than 63 grand by mid-April. But news about China outlawing cryptocurrency helped drive the crypto coin lower. It eventually bottomed below 30K in late July, but since then it has more than doubled in price in a hit in a new yearly high at nearly 67K in October. Bitcoin has had a roller coaster of a year in 2021. The price of leading cryptocurrency Bitcoin doubled from the start of 2021, then lost all those gains in a few months, before finally regaining all the lost ground in a few more months. After such massive gains on Bitcoin, Ethereum, and many others, some new traders may be jumping into the market because they're afraid of missing out on the gains. But they may not completely understand that these cryptocurrencies are being driven higher slowly by speculation. Popular cryptocurrencies are not backed by anything, unlike traditional investments such as stocks, which can be supported by the assets and cash flow of a real company. There is no underlying fundamental value like a piece of real estate or security, such as a stock or bond, says Greg McBride, Bankrate's chief financial analyst. The price represents what someone else is willing to pay for it, but that can change a great deal in a short period of time, as we've seen. The volatility of Bitcoin and other cryptocurrencies is intense. As the Bitcoin price chart shows, this kind of fluctuation is especially dangerous for inexperienced traders who may not understand how to handle it or how to process their own emotions. But the volatility is also an attraction for the kind of trader who's looking to make a quick score on Bitcoin's rebound. If you're considering adding cryptocurrencies to your portfolios, it's important to remember that they're high risk and size them accordingly, says Tony Molina, CPA and product evangelist at the robo-advisor Wealthfront. This means that you should only put a small portion of your entire portfolio into cryptocurrencies to limit your risk. Given the speculative nature of cryptocurrency, you should be prepared to lose it all, says McBride. Even large institutional and very wealthy individual investors allocating to crypto are putting 1% or less of their assets into it, he says. Such a small allocation to cryptocurrency ensures that even if it does go bust, your investment won't sink your whole portfolio. But beyond the risk of cryptocurrency itself, you often have much higher priorities for money than gambling in a high risk market, says McBride. He points to having an adequate emergency fund, contributing to tax advantaged retirement accounts such as 401k and Roth IRA, paying off high cost credit card debt, among other goals that should take priority. And millennials favoring cryptocurrency should also make sure student loans are paid off before wading into the cryptocurrency arena. Paying off your debt and eliminating that interest expense is the surest return you'll ever receive, and it gives you more financial freedom too. So, other concerns with cryptocurrencies? Trading cryptocurrencies also presents other issues, and those wading into the market should consider how they can be affected by the taxes they may rack up. Even if they don't receive official tax forms and the range of scams they may run into as part of cryptocurrency trading. So the taxes are, you may think cryptocurrency is not subject to tax, but you'll be wrong. Like other assets, if you make a profit on your trades, you'll owe capital gains taxes. The IRS is looking much closer these days at those who may be trying to evade taxes through cryptocurrency. And it's a big area of enforcement now. In fact, if you've traded or used cryptocurrency in a tax year, you'll have to divulge that information on your annual tax return or risk lying to the authorities. But it's not just traders who can generate tax liabilities if they're dabbling in crypto. Even if you simply use cryptocurrency to buy something, you may have generated a tax liability if the purchased goods and services were valued at more than the price you paid for the crypto. And you're still on the hook even if you didn't receive a tax statement from your crypto broker. So it's up to individuals to make sure they're in compliance with the tax laws or risk the penalty. Next, scams. While cryptocurrency has been linked with high-profile ransomware attacks, individuals can be subject to lower-profile scams. In fact, a surprisingly high number of people already have been. Nearly 33% of crypto owners have been scammed, according to a survey of 1,000 crypto owners by CryptoVantage, a review site for crypto products. The average loss was $538. The most popular scams involved emails, imposter websites, and fake mobile apps. The most costly for crypto traders was imposter websites, where traders lost an average of $932. So the methodology. This study was conducted for Bankrate via phone interview by SSRS. Interviews were conducted from May 25th to 30th, 2021, among a sample of 1,008 adults. Data are weighted and are intended to be representative of all US adults and therefore are subject to statistical errors typically associated with sample-based information. So, what do you think about this survey? Nearly half of millennials are comfortable owning cryptocurrencies. Comment down below and let me know if you fall in the millennials or if you fall into the Gen X and if you fall into the baby boomers. And comment if you are comfortable owning cryptocurrency. All right, let's take a look at our prices one last time before we head out. At number one, we got BTC, $68,343. Ethereum, $4,806. Binance Coin, $645. Solana, $245. Tether, $1. Cardano, $2.18. XRP, $1.27. Polkadot, $53. Dogecoin, 28 cents. And last but not least, USD coin, 99 cents. So there you guys have it. Thank you so much for making it this far to the podcast and YouTube video. I appreciate all the love that you guys been giving me, especially all the messages, all the comments, and all the DMs. So again, remember, this is Dave's Daily Crypto Take. All the news updates are unbiased for crypto, against crypto, everything in between. Please like, share, subscribe. Catch me on Google, Spotify, and Apple Podcasts, and I'll see you in the next one. Peace.